Hi, guys, and welcome to the 50th episode of the weekly trading wrap up, where we talk about the week in markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. Today, I'm recording this on Friday, which is this day right here. We're looking at the picture of the S&P 500 as usual, and this is the week of the 27th. Today, it's Halloween Friday, or for my French peeps, Halloween. Anyways, not that scary actually. This whole week has been a gap up on a Monday. We're looking at Monday, Tuesday, Wednesday, Thursday, Friday here. Arrow denoting the beginning of the week. Gap up on Monday because Trump and Xi, well, there was optimism that they were going to do some kind of deal, and they did some kind of deal, and the market liked it. So we're at highs. So the technical picture, bullish, nothing has been violated. Let's look at the moving averages. You don't even have to. Everything above everything. Short-term moving average, above middle, above long. This is one of the strongest bull markets ever. But you wouldn't think that if you looked at the technical, and not the technical analysis, but the sentiment analysis, because with the technical analysis, we always pair it with a sentiment. We like to look at the fear and greed index, and we're at fear. Smack down in the middle of fear with markets at highs. It's great to see. Almost everything is fear, extreme fear, neutral put call options, extreme fear, the safe haven demand. So everything is like still fearful in the fear and greed index, and in the AAII sentiment survey, we have a little bit of a difference. We have the bulls coming in again. I mean, there were always strong bulls at 44%, but now the bears are at 37%. Okay. A couple of weeks ago, when the market fell a little bit, like 3%, the bears came back because we were saying that the bullish sentiment is not really cemented in yet. Okay. So maybe we're starting to get that now. I mean, we're still above the average for the bearish sentiment, which is 31%, but we're getting in that direction. Okay, what we want to see, like we keep saying, is a lot of bulls, which we have, but these guys to go all the way down to, like, I don't know, 20, 21, like almost nothing. Okay, and this is why I remain bullish now until the end of the year, because I think it's going to take 3, 4, 5, 6, maybe 8 weeks of real bullishness to set in before this market has some kind of meaningful correction. Meaningful meaning at least 10%. So you can see this action playing out. We have crappy, I was going to say a bad word. Excuse me. We have crappy sentiment. Market all-time highs, stay bullish. That's all that needs to be said. Okay. The second part of our analysis of our segment is usually the macro, and because there's a government shutdown, there's no real macro, but we did get on Wednesday the Fed meeting, and surprise, surprise, we cut by 25 basis points. Not really a surprise, but let's go to the Fed Watch tool. It's already, we're looking at it past the meeting, so the next one here is on December, and as you can see here, no change denotes 3.75 to 4% interest rates, which means a cut of 25%. So there is a 65% chance that by December meeting, we're going to cut one more time. Even though during the meeting, Powell started talking that, and we don't have any government data, so we might not cut in December, okay? Because before that meeting, this percentage was around 95, between 90 and 97, let's say. It's almost a certainty. But with his certainly semi-hawkish talk, it's back down to 65%. Still very high. And I think as the day goes by, as the weeks go by, this is going to go up to like 90% again, 95, because he's probably going to cut. Okay, we are actually going into, I don't want to say QT, but he also mentioned that they're going to stop the balance sheet runoff, which is they're going to stop their QT. Okay, we're going to go into QE, is what I meant to say, because they're stopping their, stealth QT and thinking about eventually, which he did say in his press conference, eventually we will get to the point fairly soon where we have to talk about expanding the balance sheet. And guys, that means QE. So don't pay attention to him saying that, we might not cut. They're going to keep cutting. Okay. and it's going to be very bullish for the market. Asterisk, maybe, maybe not, but it's going to be bullish for gold. Okay, so we have the Fed meeting coming in at semi-surprise, because he didn't sound too dovish, but it still doesn't change our overall bullish view as of yet, and the fact that there's still a lot of fear out there in the market. Okay, so let's go to our last segment. Okay, what did I notice that was kind of like unique this week? Well, on Tuesday, Trump comes out and announces an $80 billion nuclear deal with Westinghouse, okay, which is partly owned by, we're talking about uranium, of course. So the uranium sector is on fire recently. So this $80 billion nuclear deal with Westinghouse is cocoa, chemical. Okay. This stock on Tuesday ripped and stayed at the highs for the whole week. Of course, it went down on Friday, but this is a very, very bullish setup for the nuclear industry. Okay, so what do I think of the nuclear industry? I am long nuclear in my personal account, not as much as I would have loved to be long, but this sector is very strong thanks to the AI and it's a combo of AI and the critical metals play or minerals play that Trump is championing. So although I am very bullish uranium, okay, this is for me a wait and see period because it's getting very, very stretched. I mean, let's look at some of the companies here. You have Denison Mines, close to the highs, but this is not a setup to buy. Okay, the breakout here was the time to buy. So, and maybe even the retest, but let's see where the moving averages are here. Yeah, if you miss this consolidation or this breakout, you have to wait for the touch of the 50. That would be the next technical point. What I'm trying to get at here is that in the uranium sector, you don't really want to go long right now. You have to wait for a technical reason to go long. And the technical reason would be a pullback to the 50. Okay, it's done that a couple of times because once that happens, if it does happen again, maybe around here when it's even higher, who knows? Nobody knows. But what you want to do is look for technical reasons to enter strong sectors. Okay, so you have here DNN would be that retrace to the 50. We have this one that I like. I've been playing this recently. It's Centrus Energy because they are U.S. enrichment. Okay, very enrichment part of the fuel process is controlled by the East. It's controlled by Russia and Kazakhstan and all that. Very rare to have enrichment in the West. This is one of the few companies that has it. You want to enrich it to UF6, which is like the precursor to creating fuel rods. Okay, so you take your U308, you enrich it, and then you create your fuel rods. The enrichment process, now this could be a good one because this is probably the only big one in the States. So you combine the enrichment portion, which Trump wants to protect, with the critical elements play. So this is another good one that I would wait to buy on any technical reason. You also have, of course, GEV. That's sort of GE, holding here. Okay, you have to wait. I wouldn't be buying it. And then you have Constellation with Energy, which holds a lot of nuclear plants. Okay, the one that the one that's very weird to me is Oklo because these guys are they have nothing. Okay, they have absolutely zero. Like if you look at the earnings, they have zero earnings. Okay, it's all hope and dreams. Thank God these guys are being run by Sam Altman. Otherwise, you wouldn't see this move. This stock was down to it was a SPAC. 10 cents went down to like $6-7, not 10 cents, $10 as a SPAC back in the day. Okay. And then a monster move to 190. It's like, almost 20x in a span of 1.5 years on nothing. It's all because of Sam Altman is behind it. So there is no reason to be in it, but you're taking a big chance going into this one. Okay, this one could really get destroyed for some other reason. Okay, but it's riding the nuclear wave. What are you going to do? Okay, so this is why, for me, uranium, given all these crazy moves, uranium is just too overpriced now. It's on a deal. I wouldn't buy it in my personal account. If you didn't buy it back when it was unloved for investing purposes, because investing is different than trading. If you didn't buy it for investing purposes and riding it right now, I wouldn't be in it. Again, wait for technical reasons. to get into this sector. Okay, so it's too hot for me at this point. Okay, the next thing that I noticed is this week is Bitcoin. Okay, Bitcoin. Let's get rid of these. Well, actually, we need it. Okay, I know it looks a little cluttery with all the moving averages, but it is necessary for this analysis. So Bitcoin, it seems very, very weak. I mean, you can't go by your feelings as a trader, but when you see some weakness going into this space, it's really a reflection of the sideways consolidation. Because when it goes up, you see strength. When it goes down, you feel weakness. When it goes up, you're being whipsawed between strength and weakness, okay? What matters is that it holds its technical setup, okay? And this is the 200-day moving average. It keeps hitting it, violating it, whatever. It's not perfect. But the thing is that it keeps fighting to maintain the 200-day moving average, which is key, especially for Bitcoin, because the fundamentals for Bitcoin, I don't know them very well, and it's a very, very nebulous and dark space because very few people control the vast majority of it. It's a very small float. In other words, any big whale can come in and slam it at any time. So what we rely on is the technicals more than anything. So, and it's a proxy for the market. Like, I think the market's going to be bid until the end of the year. So this is a play on the market. Usually Bitcoin is a levered play on the market. So holding the 200, okay, holding it, which is very good because, as you know, we are along Mara, a Bitcoin play here, Mara, and it's struggling. We have option structure that expires in January of 2026, so we have plenty of time for it to come in. And right now we're just like at the money of our option structure. So we bought it around here when it was consolidating. We were in the money and then back down again. It's a reflection. This price action is a reflection of Bitcoin's manic depressive sideways consolidation type action. So here, Bitcoin is right at the bottom of this range. It needs to start coming back. If the market starts coming back, I suspect this will come back into its range. I don't know if we'll break out to new highs. We might do that if we get market euphoria. But apart from that, I think it might just stay around here for a while. Okay, it needs to hold this. Okay. Now let's contrast this with gold. Okay, another thing that interested me is gold, as always. Okay, and the reason it interests me is because everybody was telling me in this breakout, nobody was in it on this low volatility rise. Okay, should I buy gold? Should I buy gold? Should I buy? No, you wait, because if you're not in it when you were supposed to be in it, you can't. You missed the train. Now it's your chance to buy. For the past 2 weeks, it's consolidating. Okay, we had massive overbought on the RSI, and now it's back to neutral. So what are you waiting for? Okay, when gold corrects, you have to buy the pullback. So like everybody here is bullish, but when gold pulls back, nobody wants to buy. Okay, this is when you have to buy. Okay, but not gold itself. I did it with the GDX, the miners. Okay, now with GDX, as you can see, the breakout was nice, but it did hit the 50-day. So you should have been buying around here, even though it's not perfect. Okay, you should be buying the first, like we said with uranium, you should be buying the first technical reason that you get that comes your way. Okay, stop trying to predict. Just buy the first technical reason that gold gives you, because the fundamentals are on your side. That hasn't changed. Forget about the interest rates. Forget about everything. It's being accumulated by the world central banks. I mean, China is not going to stop buying gold because they made nice on a little meeting with Trump for trade. Okay, this is an ongoing economic battle between East and West, and they're going to still buy. So you know the fundamentals on your side. So now you missed this whole move, but now you need a technical reason to get in. Here's your technical reason. Personally, I bought more of the juniors when they hit, because as you can tell, if you've been watching previous WTWs, the big move I think is going to happen in the juniors because, well, they hit their 50-day, but let's go back to a monthly chart. As you can see, the juniors are not even close to their all-time highs, whereas there's a monthly chart of GDXJ and the GDX, whereas the seniors have broken their highs and have retraced on a monthly level. They almost retouched the breakout point, which is another technical reason to go long. Okay, like if you look at if you look at GDX, the daily, your technical reason was the 50, and then it's the breakout point, the all-time breakout point. Almost touched, never got there. I would have loved it to go there. I would have bought GDXJ itself. GDX itself. But going back to the juniors for the daily, this is your chance to buy. Right at the 50, I got in. Okay, so with various vehicles. But that's what you want to do. You want to buy the first technical reason that is given to you on a fundamentally strong trend. There you go. So that's it. Nothing else interested me. We have the gold. We have Bitcoin. Let's wrap it up. We have the Bitcoin right at the 200. It needs to hold this. I mean, if you're not long, you can buy here and have a very close stop. That's why the beauty of buying when it's at your technical level, your risk reward is better set up than if you were to buy at the highs during a channel. Okay, when there's a channel, you want to buy the lows. Okay, you don't go with momentum. You're almost like a contrarian when you want to buy a channel. Okay, not a momentum guy. So uranium, we saw the uranium stocks, CCJ, because Trump is going to invest in this sector, on fire. But stay away until you get a technical reason to buy. Okay, I'm not buying this at all right now. And for SPY, we know. Let's get rid of this arrow. SPY, stay long as the sentiment is fearful and still quasi-bearish, I would say. What I'm looking for, guys, in case you didn't know, is for this needle to be at extreme greed for a while, okay, and for this to be bullish with no bears. Then you should start being scared as a bull. Okay, but until that point, we ride the bullish trend. So with Halloween over, let's see what November and December bring with the Black Friday rally, the Santa Claus rally. Let's see. Later, guys.